What consumers need to get relief is a decline in prices. Now, of course, the Fed would say, oh, that's terrible. We can't have deflation. Well, if we have a huge increase in prices, what's so bad about having a decrease in prices to bring them back down? Remember, the Fed talked about inflation averaging. They wanted inflation to average 2%. Well, last year, inflation was 7.7%. The year-over-year rate of inflation in November is 7.1. It's probably going to end the year north of 7, which means we've got 2 years of inflation, which when added together represents a 15% increase in the cost of living. That is a huge increase. And especially when you consider the fact that it's probably double that, because the CPI is only capturing about half of the increases in consumer prices that consumers are actually paying. That is a massive increase in the cost of living. That is why so many people are moonlighting. And again, that's why we have so many jobs being created, because people can't pay the bills with one job. They now need second and third jobs to pay these higher prices. So this is not a strong labor market. This is a weak labor market and a weak economy where people are forced to work multiple jobs when they used to be able to get by with just one. In fact, I just read that the percentage of young Americans, and those are 18 to 29-year-olds, that are still living at home with their parents is now at the highest level since 1940. Now, that was the end of the Great Depression, and so a lot of people had a hard time moving out during that period of time. We haven't been in a depression yet, at least not officially. I think by the time it's said and done, everyone's going to acknowledge that this is actually a greater depression. But we have nearly 50% of 18 to 29-year-olds living at home with their parents. Why, in 2022, are so many young adults still living with their parents? A, because they don't have jobs at all. And if you don't have a job, well, you can't afford to pay rent. Or B, you have a job, but the job doesn't pay you enough to pay rent. So you don't have any choice other than to stay home and live rent-free with your parents. Now, maybe some of these young adults are chipping in and helping their parents pay the rent or pay the mortgage, whatever they're doing. But in fact, one of the reasons that young Americans have money to spend on clothing or travel is because they're not spending on rent because they're living at home. But of course, most young Americans would prefer not to live with their parents. The fact that they end up having to live with their parents is a sacrifice that they have to make because the labor market is not strong enough to provide young Americans with a high enough real wage so that they can afford to leave the nest. So a lot of parents who are looking forward to being empty nesters now have a nest full of their grown kids who can't afford to fly the coop. But the point is that prices are still rising. And if the Fed was really true to its commitment of averaging inflation of 2%, well, how many years do we have to have inflation way below 2%? And there's not a lot of room to get below 2% if you want to be above zero. But how many years of sub 2% inflation are we going to need to get the average rate of inflation down to 2%? In fact, the Fed is not even projecting that inflation is going to go down to 2% in 2023. Its current projection for 2023 average inflation is 3.5%. Now, of course, I think that's optimistic. I think we're going to miss the mark by a mile, but that's what the Fed is projecting for 2023. And even in 2024, they're not looking for 2%. The projection there is 2.5%. So maybe 2025 is the first year that the Fed believes it will finally succeed in getting inflation back down to 2%. But if the Fed is going to stick to its commitment that inflation average 2%, we'd have to have some years where prices decline. Otherwise, there's no way we're ever going to get the average down to 2%. Of course, that's not going to happen. Inflation averaging will never be brought up again. It was only brought up initially as a ruse because the Fed needed some excuse why it was allowing inflation to be above 2%. So it came up with this idea that we needed inflation above 2% to make up for all the years that it was below 2% so that we could bring the average up to 2%. Well, that was a bunch of nonsense then. I called out the Fed for how ridiculous that policy was. But again, now that we're so far above 2%, they're never going to talk about the need to average 2% because that would require much lower inflation than the Fed is possibly capable of delivering, given the current state of the fiscal budget, how much money has already been printed, and how much money they're going to print to monetize these enormous deficits. So we're never going to get back down to 2%. And that is the real important point that seems to be lost on everybody. What investors are trying to figure out is, has inflation peaked? Have we seen peak inflation? Now, I think the answer to that question is no. I don't think inflation has peaked. Now, it may have peaked for a short period of time. It may take until the second half of 2023 before we get a year-over-year rate of inflation that was higher than the high water mark for 2022. But who knows? Maybe it'll take into 2024. But the one thing that I'm certain of is that we're not going anywhere near 2%. And that is what investors still don't understand, that the days of low inflation are over, and we're living in an era of high inflation. And that is a complete game changer for the Fed. And the Fed has yet to come to terms with this new reality, nor has the market, because investors who don't understand that the game has changed, well, they're going to be playing by the old rules, and they will lose if they don't adopt their strategy to the new reality of high inflation and higher interest rates. Now, we still have negative real interest rates, but the nominal rate is higher and inflation is much higher. And more importantly, it's going to get a lot higher, and it's introducing another element of risk into the markets, because prior to that, investors were confident that inflation would stay around 2%. Once they have to acknowledge that it could be much higher than 2%, but how high is anybody's guess, that introduces a lot of risk that needs to be priced into financial markets that had been priced out when so many investors were lulled in to a false sense of complacency, and they actually believed that the Fed could deliver on its commitment, that it could fine-tune the inflation rate to such a precise degree that it could keep it right around 2% indefinitely. But the most significant market reaction to the better than expected inflation data was not the stock market. After all, the Dow couldn't even hold on to its big rally. The big news was in the foreign exchange market and the gold market, because even though the dollar didn't close on the lows, it still closed the day with big losses. The same thing with gold. Even though gold backed off its $40 high, it still closed the day about $30 higher, and more importantly, back above the $1,800 an ounce level. And as I've been saying, to the extent that we do get a Santa Claus rally before the end of the year in the stock market, it will be short-lived, because this is not a bull market in stocks. We're still in a bear market, but this is a correction within that bear market. In contrast, we are in a new bull market in gold. We're in a bull market in gold stocks, and I believe that we are in a bear market in the dollar. Now, we're not technically in a bear market yet because the dollar hasn't fallen enough, but it is looking so toppy to me on a chart that I'm going out on a limb now, given that we are below the 105 level and we have closed below that level for 2 weeks in a row now in the dollar index. And in fact, after today's action, the dollar index is now at 103.5. This supports my forecast that the moves in the dollar and in gold that we've seen over the last couple of months are sustainable and will continue into 2023, whereas I still expect any gains that the U.S. stock